right, back for another episode of Measurement Talks. Spicy week with earnings in Q1. Somehow, Meta's the only stock that went down and everybody else went up. Which, after 3 quarters of like beat and raise, I guess Wall Street somehow has not yet learned that, you don't bet against Zuck, but here we are. The more interesting part about the earnings was actually some of the double clicks that they had into the way the metrics on the actual ads were trending. So I know that right before we started recording, you were sharing some insights from the actual direction of the actual ad metrics. So maybe you can double click on that for us, Brian.
Yeah, definitely. I mean, the stuff I love, so earnings are always an incredible way to track a few things. One is the general cost of impressions. That's always a great indicator, but more importantly, also daily and monthly active users, and just making sure that the platforms are either growing or that they're staying the same. If you see declines, right, those are less, people that your ads can get in front of, which typically indicates a platform that's dying. With Meta, saw about flat user growth. It's sustaining. So if you hear the rallying cries of, oh, no one uses Facebook anymore, or everybody's getting off of Instagram, I don't know. Take that with a grain of salt, because the earnings indicate that the platform is maintaining their user growth. And then in terms of cost, so the average, there was a really cool metric here, like this beautiful graph that they showed in their earnings, where they were showing the average price of ad year over year percentage change. So Q1 of 2024, 16% versus previous. Oh, I'm sorry, that was impressions served. So the average year over year cost was actually 5% for North America. So US and Canada, 5% Q1 of 2024. Europe saw an 18% increase this past quarter versus previous year. The rest of the world, 20%. And then the worldwide total change was 6%. So the US saw the least change. Actually, Asian and the Asian Pacific saw negative 3%. So they saw actually cheaper CPMs, which is very interesting if you're doing planning around international expansion. US and Canada only saw a 5% increase this past quarter. Yeah. And then Europe outpaced everybody with an 18% increase. So, Europeans definitely are probably getting squeezed here with the CPMs. It's very interesting what's going on there. But very encouraging that, in North America, our CPMs are staying relatively the same.
Yeah, what I think is so interesting about this particular graph is if you look at the impression count growth, so it's so for people who want to follow along, we're looking at like slides 12 and 13 in their earnings call presentation. If you look at the ad impression count growth in the US, it was 16%, and the ad impression count growth in Europe was 12%. Mm-hmm. And so for the price to go up past those numbers, and especially in Europe, to go up that much, tells you that people's willingness to spend on the platform is actually going up a lot.
Yeah.
And it's just something to think about. Like, is it like flight to quality, right? It's like, hey, every advertiser's like, I'm actually just going to put a bunch of money into Meta because Meta is generally like my highest quality platform, or is it just like generally higher demand? And I think like some of the other platforms performing so well suggests to me that this means that there's meaningful demand increase, right? Because like if Google went up, like YouTube was like a big talking point in terms of YouTube going up, which is like a similar style, which is different than search. And then Snap also went up, then that kind of tells you that like, hey, demand for ads is actually going up very, very fast. I don't know. Would you agree with that, or would you say like, hey, we're reading too much into it, or how would you think about it?
No, I think you're spot on, right? And we can see that in the slide 12, ad impressions delivered. There was a surge in ad impressions, and so when you have like Meta is not a new platform, right? It's been around for many years. in order to serve more ad impressions, you have to increase the ad load, and increasing the ad load would suggest that there is a increase in demand, meaning there's a lot more advertisers that they have to satisfy. They, in order to keep impression CPMs from skyrocketing due to the surge of advertisers, that they have to increase the ad load. So, you know, every every third post might be an ad, or every other story or every two stories might be an ad, rather than before it was every three stories or every fourth or fifth post. And so I think you're spot on. I think that there was maybe a squeeze from advertisers moving their dollars back to Meta. You know, everybody went TikTok heavy. At one point, a lot of people were trying out new stuff. PMax was getting a lot of investment. I wonder how many of those dollars have moved. And also, like the cause or the reasons why. I wonder how much of that was because of news about TikTok, right, where advertisers are needing to de-risk and move their dollars back, as well as just better measurement, where more and more advertisers are getting sophisticated about testing incrementality, and thus they've understood that they don't need to invest a lot more in non-performant channels, like say search or maybe PMax, and so those dollars have to go somewhere. And I'd be curious what is driving the change, or what is driving the increase in demand on Meta's advertising.
I think it is. I've got a bet that it's related to what we talked about last time, where it's just sentiment is up.
Hmm.
If you remember, you were sharing also last time with the. Actually, I don't remember if we shared it on the pod or if it was separate, but around the metric that like Taylor and No Commerce and the Veros guys have put together, you could see like sentiment is starting to trend back
Yes.
up, and so like consumer sentiment is trending back up, and so people are willing to spend again. Um, I suspect that I suspect that that is part of what is giving people comfort in spending again. That, and I think the other big thing, and I'm curious how you would think about this, especially as a marketer who has to talk to finance all the time. um, I think the message has become clear where I think we over rotated to profit or profitability. Actually, I shouldn't say the word profit. Profit is actually incorrect. Profitability over profitable growth. And those things are not the same. Like you can over rotate to being profitable at a high percentage without actually increasing total profit dollars at a healthy rate if you're not investing in growth. And I think we over rotated last year, and now people are realizing that like, hey, the most successful brands, actually, whether it's ecom or SaaS, are the ones who are able to grow. Yes, you have to be efficient, but you have to grow. And so in the SaaS world, there's like this 2x rule. I actually don't know what it is in the brand world, but you get like rewarded 2x for every point of growth versus profitability. And I think like people realize like, hey, acquirers want growth and profit. And so now they're reinvesting again. And so those are the two factors, I think. It's like consumer sentiment and understanding of the actual markets.
Yeah, that's the issue I take with like cost controls and cost caps and stuff too, because like if you're in a commodity, if you're in a space that is highly saturated, the loudest person in the room wins. You can have the best product, but at the end of the day, you're selling t-shirts, and if you are over optimizing towards a more profitable dollar, you're going to limit your ad spend. You're going to limit the amount of dollars you have in the market to take up the attention span of consumers. And yeah, your contribution margin might have skyrocketed, and you are very, very profitable and healthy, and your cash flow is incredible, but you are sort of opening up the space for competitors to just swallow up the market and take over, and then it's going to be harder for you to like fight back and elbow your way back into that space. And I think that both instances, right, like if you are in a commodity, you are a commodity, highly saturated, highly competitive, for every one of you, there's like 10 other brands and alternatives that your consumers can go with. So you want to maintain your share of voice, or you're not going to have growth. You're going to be a declining business, and that scares away investors and buyers. Like, no one wants to buy the thing that's declining. On the other end of the spectrum, if you have some sort of innovative product or idea, well, you need to educate consumers on it, right? It's new. You don't have a lot of competitors, but you're probably the only, or there might be another competitor out in the market that is educating consumers that this solution even exists. That's where Nude lives, right? We're in this space where I am at the same time educating and creating market demand as I am capturing the market. And so for me, like, I could totally grow very slow and steady and cost cap my way into growth, but I don't have time. I don't have 10 years to do that. I gotta find that sort of that balance between advertising unprofitably here in these areas, because these are going to generate the demand for me to capture these sales, later on, tomorrow or next week or next year. And so that's the conversation with finance that we have, is it's always that push and pull. And I try to make sure that I have enough performance dollars and ads here to make up these guys. But I steer them away from getting into the campaigns or the channels, because that's when those questions start to pop up as well. Hold on a second. If you just cut these ads over here, we would be making more money. It's like, well, yeah, but I need these ads that, yes, look unprofitable to you right now. They're actually generating demand. They've got these cost per new site visitors. They're got these incredibly low cost per active cards. They're sort of priming the consumer, and so it's always that sort of push and pull. I steer them away from getting into the minutia, and I, like, in a way, mask it by just having strong overall performance, advertising
Totally.
dollars, and don't let them worry about how we are necessarily spending. And if they do probe and ask, then I point to Google Trends, Google search data. Google Trends data is incredibly valuable because you can interlay your spend volumes and your search of your brand, and teach them and show them, hey, look, when we do spend up, there's more demand, there's more search for the business, and that's ultimately what we want. So that's been an incredible resource to sort of, like, show them that we're not just spending out into the ether here. We're actually spending to generate a demand for a future customer.
That's so interesting. I've never heard of using Google Trends to do that kind of analysis. Um, but that actually makes a lot of sense to me.
It's huge, man.
I would
That
have never ever thought of that.
that I love Google Trends for that. Amazon has a really good brand volume data as well, which it's not as insightful. I think Google Trends does a great job. It's also cool because with Google Trends, if you have spend that's consistent, you can download the data and you can use it to, like, understand seasonality of your business as well, which I was using that to create projections. So basically, I looked over the last 2 years, downloaded each Google Trends, like their little index, and then I used those indexes to then understand how much search demand there might be in July versus August and September of the year, and then I used that to create my forecasts and projections for 2024 or next year's. But yeah, Google Trends is highly underrated. It's, like, super valuable, not just for that, but also marketing activation as well. Like, what states are we, like, I forgot the terminology for this, but your battleground states where you're like, maybe your business is competing with other brands more, maybe, like, there's less interest in your brand versus a competitor brand. It also tells you your home states, like the states and regions where, like, your brand, it just resonates with that region so well, right? So you can play a little bit of defense and offense with segmented campaigns, which is really cool. So yeah,
Unreal.
trends
You want
data.
to know what's funny? I just did Ferment Commerce in Google Trends, and it's a 0 up until early April, and then it just shoots up.
What happened? What did you guys do?
So this is why I'm sharing. So Rabba is like anytime I ask him about attribution and B2B marketing, he just, like, wants to tear his hair out, which I understand. I understand, but this metric is actually super. And by the way, I'm like, I'm not like saying like, hey, last touch is the only thing that. I mean, I yank his chain by saying last touch is the only
Yeah.
thing that matters, but
Yeah, that's the
um,
irony of you saying that when we're having this pod is unnerving, but it's not lost on me.
yeah, exactly, exactly. And so I'll do like silly things where I'm just like, man, look at our meta ads. They do so well. Like, why are you so negative on ads? And he'll just like want to tear his hair out because he's like, obviously nobody's clicking on an ad for like a high priced B2B sale. But anyway, we did a massive amount of like PR and events starting at the end of March with Shop Talk. And so it never occurred to me that one of the places where that would show up is like Google Trends data. And one of the things that I've been like starting to like think about is what types of events should we be spending more at versus less at? And that's like a very hard question because I actually, first of all, I think like for B2B, and I don't know how it is for B2C per se, but like in B2B, it's all about like know you, like you, trust you. And so like, yes, you have to do things online, but if you do things in person, that creates way more trust
Yeah.
than doing things only online. And so, but the question is like, what types of things do we do offline? And that's like the much harder question to answer. And it sounds like you guys have similar ways of thinking, which is like, what are the sets of activities that are creating the demand, even though we have these DR ads that capture the demand? I don't know. I mean, do you know the Jolie guys by any chance? Like Ryan and Arjun?
We're supposed to get connected. I'm supposed to
Okay.
get connected with Ryan. He has my email. Ryan, I'm still waiting on that email. And
So yeah,
yeah,
so
but I'm aware of what they've done and built.
yeah, so my 2 cents on this, they talk about it publicly a ton, right? And so like just from their public sharing, they do all of these activations in person, right? Like they did this like activation in Erewhon, they did like this activation in person in New York, they did this like truck activations, and like all of that is 100% in the zone of like know you and trust you, because like you're putting yourself in these environments where people are like more likely to like become aware and increase trust for then their DR work to like capture that demand. And it's like, to me, that's like, you know, that's the way to think about it. That's like the best way to think about how do you like, if CPMs are going to keep going up on Facebook, which who knows if they are, but they may, if targeting can't really come back, then yeah, you have to really think more and more about what other channels you're using and how you're using them. So that way you can be as efficient as possible with your DR channels.
Yeah, and I think even like just being very intimate with how to measure that is crucial. So I love your example here that you said for Mac Commerce, Google Trends. You see the spike up, around like early April. The other one that I think is really interesting. Have you ever heard of a drink called Mixolosh? It's Mix. Okay, no one has, not yet at least. So Mixolosh is a non-alcoholic mocktail. It's a mocktail drink. On my flight from New York, I was just scrolling, and I found this Instagram profile. It's called "The Best Marketing Strategy Ever," and it's this marketing intern who started posting April 13th, and she's basically doing 60 days to prove her boss that smashing a can is more effective than his entire marketing strategy. And so her whole thing is day one of 60, if I don't hit 500,000 followers, I'm fired. And it's just all this content of her smashing the cans in all of these innovative ways. She's using bats, she's using bowling balls, she's putting on like onesies and smashing the cans. She's just smashing cans. And so a couple things that I thought was interesting is she's posting the progress and she's like, oh look, our daily online
Oh
sessions
my
started
God.
to increase. And then She's showing like, what is this, online sessions for that week.
Oh my
And
God.
then it's, it's back to her like doing her little TikToks and or her, sorry, her reels, smashing this can. And I didn't, as I'm saying, like the Google Trends thing, it didn't occur to me like check their Google Trends data. I just did it. And so she started posting.
How do you spell this?
She started posting April 13th, and it is Mix, Mixoloshe, Mixolash. It's a very hard to measure or say name. And then April 21st, so it's like flat. There's no interest on this thing. If you look at the last 90 days for Mixolosh, it's just, there's no interest whatsoever. And then boom, it jumps up on the 21st, comes down a little bit, jumps back up. It's hitting an all-time high on the 25th. And so when we think about like measuring marketing activity, I think again, search is Google Trends very important. This right here, and like like some of these posts are doing insane too. By the way, like this one's got 41,000 likes, 348 comments. Um, you know,
Oh my
so
God.
like there's a little bit of virality that's going in here. I remember there wasn't like a link in bio or anything like that, but people were like, "Oh, what is this?" and looking at the can in the video and then searching for it. And does the marketing tactic work? Are they driving sales? We don't know. It looks like they're driving site activity. It looks like they're generating a lot of search volume right now. And so, going back to what you were saying about Ryan, like if you're doing these events, they probably absolutely have built a way to establish some sort of confidence on, okay, when we do these, we see like these things change. The same thing happens with TV spots too. If you know like your TV spots, or if you're doing like a big sponsorship and it's going to happen at, like, if a big influencer is going to post and the influencer is going to post at this date and time, you can pretty much track your sessions, and then like you'll just see this spike up. That's how TV, so a lot of TV platforms measure as well. So they don't have any pixels, but for like a click, but they do install pixels to track your website's traffic and sessions, so that they know that your TV spot runs at 6 p.m. on a Wednesday, and if at 6:07 or 6:05 there's like an anomaly in the surge of traffic, they're able to attribute those sessions and those conversions back to their TV ad, even though there wasn't a click. So, it's all very similar ways of measuring, just new ways of measuring user behavior. But you can use these to again build confidence and do what the guys at Jolie have done, and do some out of the box non-digital marketing.
Oh my God. I mean, so by the way, we've just like naturally crawled our way into like our evergreen topic around channel incrementality, which is like the single best way to do it, is it just sort of comes from the discussion. But one of the other companies that released earnings that we touched on briefly is Snap. And Snap stock skyrocket. It was like up 25. I mean, look, on low numbers, you can have big swings. Okay, so like I get it. but I still think it's like formidable. Like,
Mm-hmm.
this is like not nothing. It's a very big company. Again, to be admired. Like the thing I wonder is, so I think it's fair to say if Snap is getting that much demand too, then people are spending, and I think they're spending for the reasons that we talked about. How do you think about whether or not you should test a new channel, whether it's a demand creation channel or a direct response channel? How do you think about what are the things, because it's real time to invest into trying a new channel. That's like generally the biggest cost for a brand that's already doing well, is the time and the attention.
Yeah.
And so, like, how do you think about what are the metrics that you would want to see and the metrics that you're going to set up to understand whether or not it's a successful test?
Yeah. Time and the time and energy of setting something up, a new channel up, especially when you uh, don't have a media buyer. High consideration. Um,
Ah, man, that's funny.
yeah. So like, I don't know. There's a couple of paths of going about this. I think like the proper response is, well, what challenge are you looking to solve for? Does your business lack, upper funnel activity? Do you need to drive new customers? Are you looking for incremental customers, meaning like you've done a great job at targeting 30 plus, and now you need to find a channel to hit 18 to 25-year-olds? And like, yes, absolutely. You should ask those questions. You should see, is the channel the right mix for you? Set your KPIs up correctly, all of that stuff. I think for me, um, I have the luxury that Nude is a very broad market product, like 25 to 50 people, consumers. You have body hair, you're a customer. There's certain stipulations based on like whether or not you're a good fit or a bad fit based on how the product and the technology works. But it's mass market, men, women between the ages of 18 plus, really. I think for me that creates a very like I can fast track all of those like hypotheses and those questions, and you should totally do that, by the way. Like, don't you should know what is the general age group that's on these platforms, and like it's helpful because it lets you build the creative with them in mind. And so
Exactly. Yeah.
for me, I can fast track all of this. I go directly into, okay, design assets and creative for the medium that you're building on. So Snapchat, all right, short form, probably very like meme focused, trendy. Great. I can take my TikTok assets and I can move them into Snap. Um, in terms of setting the KPIs, I'm all about awareness right now. So I would probably look at establishing a baseline with what Meta and TikTok and my other channels are driving in terms of cost per new site visitor. I would then establish that same baseline for like cost per add to carts, the percentage of visitors that are brand new to the website, and I would then launch, right, 30 to 50 thousand dollars and spend for the month allocated. But I wouldn't start like spending that right away. I would launch like $500 here and there, start collecting some data, and then start getting a sense like, okay, our cost per new visitors, are they of quality? Are these high bounce rate, low bounce rate? Is the percentage of new visitors to on par as what the other platforms have done? And that's like where I'm looking at it initially. It's just like, what's the quality of the traffic that I'm receiving in terms of like the percentage that's new, how many are adding to cart, the bounce rates, time on site, session duration, all of that. Those are the same things, but you know what I'm saying. Once I know that the quality of the traffic is in a good place, where it's like, okay, I've spent $500 and now I've assessed that this is decent quality traffic, it's comparable to the other platforms, then I actually start at that point to like scale up a little bit and give it enough spend that I can get out of learning phase. I start doing my creative testing, trying out different hooks, different angles, all of that jazz. And now I'm optimizing for a ROAS. Now, the ROAS that I'm optimizing for is going to be solely dependent on where the platform sits in the funnel. I have the luxury of using a platform like Triple Whale, which can tell me first click, last click, platform touch, just part of the
Yeah.
journey, linear. And I'm looking at the ROAS that's reported in all of those views. And I'm saying, okay, where do you fit? Where are you driving a high first click? Are you driving a high last click? Are you driving neither? And you just kind of like, it's just a journey, right? That starts at Meta, touches Snap, and then ends up in Google. Um, and I'm assessing all of that, and then based on what the data is saying, I can now derive where it fits in the funnel to then measure and go, okay, does this make sense for the business? Is this something that's driving awareness for me and it's driving a lot of first click activity? The quality of the traffic is good. The traffic itself is cheap. Great, we're keeping it on, and I'm going to set aside some budget based on those numbers. If this is something that's like, no, it just sits last click or it's just part of the journey, I'll reconsider it. I'm going to go back to, okay, well, is it incremental, right? Is that
Yeah.
Snapchat touch point necessary, or am I just creating another touch point that people would have converted anyway? They would have gone Meta, TikTok, Google purchase. Now I've added Snap into the mix. Is that actually like helping people? So I'm going to start doing some incrementality testing off of that, and based off of that data, then I will decide how much to test. But I think if regardless of where you are, like, again, I have the luxury that I'm mass market. Understand who your audience is, understand the audience of the channel, build for the channel in mind. Start small. If you have an analytics tool, start small and just like put a couple $100 here and there and then see like what is the quality of the traffic. And then once you validate the traffic isn't all bots and that there's like humans here that are then start to scale it out and then like set aside, you know, 20, 30, $50,000. Like I like to test 50K minimums. So 50K minimum is enough for me to like confidently walk away knowing that I've truly validated the channel and I gave it a fair chance. And if it doesn't perform, it doesn't like sit in the funnel after $50,000, then it's like, all right, I'll shut it off and I'll re-explore it maybe next year.
Yeah. Well, what about for somebody with a smaller budget? I mean, so first of all, I think you and I are both in the same camp that honestly, up until like you're a $5 million brand, like Meta and your email campaigns are like all you really need. But like, let's just say your like monthly budgets are, so like, let's say you're a $10 million brand. Okay. So your monthly budgets are like $500K a month. Let's just say random, you know, like I think that would be pretty aggressive, but let's just say more like $300K a month. Would you, you know, how would you think about what is the right amount to do a test? Are you like an 80-20 in your head? Are you mostly like, would you propose like, hey, 80% is your core and then 20% is your testing budget? Or how would you think about like, what is the right amount to be using for testing?
Because of my size, 5% is my testing budget. So I always allocate 5% to new channels, and I don't roll it over. I should roll it over, right? And just like roll over and just be like, boom, we're doing $1 million test campaign. It doesn't roll over. If I don't test in March, I didn't use my 5% for testing. It doesn't mean that I get to like now do 10% in April. So it's 5% set aside to test new channels. I think this creates urgency to want to test new channels. It's something that's kind of a blip, drop in the bucket. So that's what I use. I think it was 10% when we were starting out. It was higher actually. It was that 20%, but my like 20% was really just sort of accommodating the lower total budget. At this size, like 5% is more than enough.
Yeah, exactly.
So it should.
Okay, so 80-20 is the right way to think about it if you're like not as large as you guys are.
Yeah, and like when times are good, that's like the perfect time to test. When times are going really, really well, you should absolutely test because like you have a little bit more.
You have leeway.
Tolerance. You have leeway. Yeah. You can tolerate setting aside $50,000 and like burning it up and learning. Hopefully you don't burn it up. Hopefully you start to run that and you're like, wow, $10,000 in, this isn't working. Maybe let's shut this off. So you don't have to spend the full amount, right? Don't commit yourself to just burning your cash. In terms of the volume, it's going to depend on your CPA. So every platform, they use this like 50 conversions a week learning phase. I mean, I've talked to programmatic display platforms like Light Intense, Taboola, Snap, Pin, Meta. It's all 50. I think one of them I think Pin at one point was like 60 conversions a week. But they all are starting to sort of get down to 50 conversions a week is enough for their auctions and their algorithms to learn. So, 50 times your CPA. If your CPA is $100, you divide that by 7, you need to spend about $714 a week or a day. Sorry, you multiply that by 30 days. You're spending $21,000. So if your CPA is $100 and you want to do a 4-week test, you're spending about 20 grand. And it
which honestly makes sense to me.
Yeah.
Which is like, honestly, that's perfect. Cause that's like, let's just say you do the 80-20 on that. That means you're roughly spending $100K a month on ads, which means you're probably like a $3-4 million brand.
Yeah.
And so it's like the math actually works such that even if you wanted to, you couldn't actually try to channel diversify before you're a $5 million brand without taking cost on the effectiveness of that test.
Yeah.
And so like there are many, look, there's tons of reasons why you should only be doing one channel and then your retention up until like you're a $5-10 million brand. But even just the math kind of tells you that that's what you got to do.
Yeah, that's an interesting. Honestly, I would love to see that like written out. You're absolutely.
You should write a thread.
Yeah, I think that's a good next step here. It's let's get a thread going and like jot it down because never thought about it that way. But that formula, 50 conversions a week times your CPA divided by 7 times the number of days you want to run a test, which typically 4 weeks is enough time. it does force this sort of best practice for you to not diversify unless for some reason you have VC funding and you like want to just like for some reason. But yeah, that's a great observation. I think that it's salient and it sort the math kind of checks out. And now that's also like if you wanted to go super diverse, like so that's like one ad set, one campaign, right? Which you're testing the channel. You should keep it fairly broad, keep it, you're trying to get a sense of the media. If you wanted to expand that out and you're like, no, we're going to test all these different tactics, retargeting, prospecting, retention, that's going to demand more capital. So this also does force a more simple strategy to understand like what is the general quality of the traffic, and then based off of that confidence, you can then start to boost up your spend a little bit more and more. So that's where brand sorting out. So I love that. I'm glad we now have a go-to best practice rather than just kind of like finger in the air. 50 grand sounds good.
Yeah. Now you can tell your CFO like, hey man, this is just the way.
There's a formula.
This is the way. Yeah. This is just the way the math works. So,
yeah.
Awesome, man. This has been an incredible session. You got to always end on a high note. So we're going to cut it here and then we'll see you all in the next one. Peace.